Watching the market react in response to this job number. And to break down the numbers, we're joined by Jason Ware, the Chief Investment Officer at Albion Financial Group, and Max Wolf, Managing Partner at Multivariate. Guys, it's good to have you with us this morning. Jason, let's start with you. I mean, these numbers entirely unexpected. What's your reaction?
Yeah, this is really surprising to the upside. I mean, as you three noted a moment ago, the expectation was for a loss of 8 million jobs, and what we're actually seeing was a gain of 2.5 million and an unemployment rate that came down, did not go up. The expectation was for near 20% unemployment, which would have been the closest to the Great Depression that we've seen, beating the Great Financial Crisis. So this is certainly welcome news for investors, for economists, and for the labor market.
Max, I want to bring you in. I think probably Americans are looking at this and they're wondering, is there an error? How are we getting these numbers when the expectation was that they were going to be much worse than April?
Yeah, so look, I don't know if there's an error, although it's quite possible. So I'd take a close look at it. Separate and apart from that, I think these numbers don't reflect the economy or the reality in the country. So they're good news, but they're good news like a stock market that goes up on terrible news every day. Story doesn't end well. So this is your uncle who had a stroke. You come to his room. He's doing jumping jacks and karate kicks. It's pretty exciting. But the next time you see him, he'll probably be lying in state.
Okay, so I do want to just look at the numbers a bit here. It looks like the wires say, actually, Jason, that 2.5 million jobs were added. The expectation was that 8 million were lost. Is that the data that you're seeing?
Yeah, that's exactly what I just said, is that we're seeing an addition to payrolls. And I think the first reports were it was only a loss of 2.5 million. But as I'm going through my feed and looking at the data coming in, we saw an addition. So it's pretty, that's stark, given that the expectation was for an 8 million loss. That was so surprising that I had to go check 4 or 5 sources right before we went on because it looked like a typo. So we were seeing economic data in March and April that looked like a typo to the downside. What we're seeing in this report seems like a typo to the upside, but yeah, big surprise.
Okay, so Max, I want to bring you back in here. This must indicate that companies were starting to rehire in the month of May.
Yeah, look, obviously there was an opening up, and these are provisional data, so you want to check very closely. But the opening up probably moved people off the unemployment rolls in a meaningful number here. But I mean, look, we want to have this be short. I do too. It isn't. It's going to take a year or two to figure out where we are. And as the economy opens up, there'll be the initial pop of demand and rehiring. And then we're going to figure out how deep this recession or depression is, right? So we're not even at the end of the beginning. So we're nowhere near the beginning of the end. We might want to be, totally understood. I get it. But we know the airline industry is a sort of desiccated shadow of its former self. We know the restaurant industry is like that. We know the tourism industry has gone for years. We know the office industry has gone for years. So whatever the monthly churn is, whatever these numbers mean, all good numbers are better than bad numbers. But this is in no way a picture of the economy any more than a stock market that has 50 of its 50 best days when 110,000 people die and global trade and agreements for globalization catastrophically collapse.
Okay, so we do see the Dow Jones Industrial Average jumping 500 points, well above the 300-point gain we were looking at pre-market before these numbers hit the tape. Obviously, investors optimistic that 2.5 roughly million Americans and jobs were actually added. Again, this is an addition of jobs, millions of jobs versus losses to the tunes of millions. So pretty significant there. The Dow now rising 600 points. Jason, there is a little bit of cross currents, though, and I wanted to discuss this because continuing claims, we saw that data out yesterday, that showed that continuing claims actually rose last week to 21.5 million, even though economists were expecting a decline. So explain the differences that we're seeing in both of these data points.
So we saw continuing claims the week prior to that dip by a notable amount, and then we saw them rise slightly in yesterday's jobless claims report. So there's a bit of, like you said, cross current between the two. But what we know is that 21 million continuing claims is a very high number. What we know is tens of millions of Americans are still unemployed due to the contraction of the economy because of coronavirus. What we know is that the labor market is not healthy right now. What we know is that we're in recession. Those are things that we all understand. Those are things that we've certainly seen in the data over the last many weeks. But again, what's most important here, and I think what needs to be is probably the most important, the most salient point for your viewers, is that things are improving. They're not back to where they were. They won't be for some time. But what matters more is the direction we're on, the path we're on. It's not so much the absolutes of good and bad. It's whether things are getting better or worse, and things are clearly getting better. Now, that doesn't mean that it's going to be, blue skies from here and we're just going to open up and everything's going to be rosy within 6 months. But you have to start somewhere, and I think this report is a good start.
All right, guys, we got to leave it there. The market's surging on this news. The Dow Jones Industrial Average jumping more than 600 points pre-market on an addition of roughly 2.5 million jobs last month, and that unemployment rate coming down. Thanks to Jason Ware, Chief Investment Officer at Albion Financial Group, and Max Swift, Managing Partner at Multivariate. Thanks, guys.